All right, everyone, another week, another update. HIMS, I believe, is going to reach $50 by the end of this year, probably before the end of this year, and I'm going to go over exactly why. I'm also going to go over the stock market performance, and this is week 58 of my $100,000 challenge. Let's get into it. All right, now first off, I am getting sick, so forgive my voice, but let's just get into it, right? We have the weekly stock update. I'm going to go over why I believe HIMS stock will reach $50. I'm going to go over the stock market's performance over the last week and go over my $100,000 challenge. It's week 58. Please give me a like and subscribe. It does a lot for the channel. I really appreciate it. So, HIMS stock to $50. This is the chart, and it's been bad. It's still minus 45% since October 15th of 2025. Right? So we're at 34, 38. It's about, almost half of that done. So it was at, 70, it was 60, well, right? Yeah, right here. So it was about 63, somewhere around there. It's minus 45% since October 15th. But when you look at how this chart has reversed, I do believe it's going to just bounce right back up to where these levels are. And as you can see, this is the $50 level, which still doesn't even put us back near the all-time highs at all, right? So I'm gonna go over exactly why I believe it. Really quick, I'm gonna go over HIMS. I'm sure you already know about HIMS, but it's a direct-to-consumer healthcare leader. They are the king in this department and in this industry, right? Their brand, everything, they are like number one, right? Their growth, everything, you've heard of them probably. Number two, they expand their product portfolio, right? From hair, skin, sex, weight loss, mental health, all that stuff. They do it all, right? Revenue growth, if you know anything about their first quarter, it was horrible because of the Novo deal. That's fine because everything else going forward should be positive. They're also doing personalized care and their AI technology. So they're using personalized healthcare to really keep the customers. Increasing lifetime value. So again, subscription revenue and upselling, right, from the Novo and everything that they have. And then they have deepening revenue streams per customer. So their average monthly revenue per customer or per subscriber, whatever they call it, right, has been going up. Future growth catalysts and partnerships, so prescription access, retail expansion, and employer solutions. And of course, they did not touch on this graph peptides, right? Peptides is going to be a big boost, so I'm going to go over that really quick. The latest quarter, as you can see, they reported a negative 40 cents. That missed by 43 cents. Everyone thought they were going to report a profit, and they actually reported a loss. Absolutely horrible, right? They missed. They missed on everything. So it was bad. August 3rd is their next earnings. You keep this week, this 2-week period is going to be big. Right before this is going to be peptides, and again, I'm going to go over that in a minute. But on August 3rd is their earnings. That is going to be huge because it's going to be such a difference from the first quarter because it sold off pretty hard. I mean, now it's definitely recovered since their first quarter earnings, but maybe the sentiment really hasn't, right? It's still pretty heavily shorted. So it could still, when they report, I mean, depending on how it goes with the peptides, like how I believe it's going to go up significantly from the peptides, but depending on how much it goes up, we could still see it go up even more when they release their earnings. March 26th is when they released the Wegovy. So again, at the end of the first quarter is when they finally were able to have the Wegovy available. So none of those numbers really hit the first quarter, right? This next one is going to be huge because it's going to say everything about the Novo deal and how it's working for them. They're also entering international through the eucalyptus acquisition that they just did, and they just borrowed a bunch of money, and they have insurance on it basically for all the investors up to about $52. I think it's $50.15, right? So they have this thing called cap calls where they basically ensure that there's no dilution up to $50. So that's a heavy call by the management. And like I said, peptides, right? We have July 23rd and 24th coming up in this meeting. That's going to be huge because it's pretty much, it's expected that they're going to say yes, they're going to reclassify it, and then that's going to allow HIMS to compound the peptides and do all kinds of things with it. So that's going to be huge for HIMS. And then the market right now is 80 to 140 billion, but it's projected to be about 300 billion by 2033, 2035. So it's a big market, right? And then also, middle of June, Barclays raised its HIM price to $39 from $29. $39 is not that big of a reach from here. So, but they're getting raised, right? And then this is what I was talking about earlier about how they had the $300 million loan. It ended up being actually $400 million. And so basically they pay 0 interest on this loan. The investors, the lenders, they can exchange the money that they loaned for HIM stock, except they're not going to do that, right? Well, I'll explain why in a second. Why do HIMs do this? For the expansion of eucalyptus, so they could buy that, and then also their AI capabilities. So now, if you're thinking, oh, I'm a shareholder, and they just did this big loan, and the dilution that I talked about, right, that lowers how much your share is worth. But they had this thing called, like I said, cap calls, which they effectively raise the price at which dilution hurts shareholders up to $50.15. So basically, if you're a shareholder, even if they, exchange these loans for shares, it's not going to hurt us, right? So that's good. So in the short term, it kind of fell a little bit, the stock price, but long term, HIM's got a massive pile of cash for free, 0% interest to grow the business, right? And if they use the money wisely to acquire eucalyptus and improve their tech, the deal could be very positive for the company's future value. So I believe HIMS is going to $50, minimum $50 by this year. And it could be more. But I think in the end of July, beginning of August is going to be huge when they do the peptides and they release their earnings. It's going to be crazy. So my portfolio is about to get a little volatile here in a second. All right, stock market update. What's been going on in this last week, right? We got Nvidia and Apple and Meta. That's kind of a little different than the usual, right? They're going up 7, and then 10%. That's pretty crazy. You're usually not seeing them move up that much lately. And then you also have Broadcom up almost 10% as well. So, kind of a mixed bag everywhere else. Producer manufacturing, as you can see, is pretty red. Consumer non-durables. But it's also just kind of a mixed bag everywhere. This is the S&P 500. It's up 20% since March 30th. 0% since June. I think it was like negative 0.5%. But basically, it's flat since June 2nd. So a little over a month, and S&P 500's gone nowhere. It's up 20% though since March 30th. Oh, there we go. NASDAQ, 3%. It's down 3% since June 2nd, but it's up 26% since March 30th. So again, the NASDAQ is, it's a little bit more volatile. It does go up more, down more. So that's what it is. So it is down 3% since June 2nd. So, we want to see, at least for me, this price is about 26,600 right here is where I saw it at. That's going to be a big one. If we go above that, that's going to be a bullish sign. If we kind of touch this and then kind of bounce down, that might be like, okay, we're going to start settling down here, But that's also the good thing about being a individual stock picker, like for HIMS and stuff. HIMS is not necessarily at all part of the NASDAQ or anything. So, the NASDAQ is just all of them together. So it's fine when you can pick individual stocks. The stock market right now, the emotional part of it, we're in neutral. We're almost exactly at 49. Well, yesterday it was 47. A week ago, we were in fear, 32. A month ago, we're almost in extreme fear, but we're just in fear, 26. And then a year ago, in extreme greed. So the stock market is emotional, plain and simple. All right, now we're kind of hitting our averages close, right? Historical averages is 37.5 for bulls. We're at 36.3. The bears is 31.5, so not that many over there. All those, people who are in the neutral, they all went to the bear side, right? You can see that it's up about 6% compared to the historical average. So stock market investors are slightly more bearish than usual. let's go over the earnings that are coming up. This is going to be now, we're kicking off the second season, right? The second quarter of all the earnings releases. So we got Citibank, Goldman Sachs, JP Morgan, Bank of America, Wells Fargo. I mean, that's banking day, right? And then also TSMC, which is a big one, but also Netflix. I think Netflix is huge. That's a company that I have personally invested in into other accounts. I don't have it in this account, which I've been thinking about adding it, but because I am just aggressively going into these other stocks, Salesforce and ServiceNow, I haven't added to my, I don't want to have too much dilution in my portfolio. So I am going to stay away from buying Netflix. But in my other portfolios, I do have Netflix. Actually, my kids do. So, so there's obviously, there's some other big earnings, United, Progressive, BlackRock, ASML. But, I believe that, this big chunk right here of banks plus Netflix and TSMC, those are the ones to really be on the lookout for. All right, my $100,000 challenge. It is week 58 now. Disappointing of myself, I have skipped a couple of these weeks recently because of just personal stuff, a lot of work going on. And as you can see, I'm also getting sick now, so everything is trying to hit me in this last month, but I'm powering through this one. My $100,000 challenge, I'm at $10,300 and almost $2, right? So I'm doing all right. I mean, doing okay, but I could be doing better. I should be doing better. But when I started this challenge, remember, I started it June 2nd, 2025, and I had a big chunk of my portfolio in HIMS. The way I started this challenge, I didn't buy HIMS at that time. I just started the challenge with a portfolio that I had already created. So HIMS was already a big holding in that portfolio, and so it was at like 52, 58. It was in the 50s, and I knew that was going to be a big problem of my portfolio, that HIMS was not going to perform as well as I wanted it to, but I did hold on to it. I actually sold some. I sold about 20% of my shares, and then I used the profits to just buy more of HIMS. So anyway, that being said, HIMS has been a big part of my portfolio. I'm up now 55% on it, which is great. There's a point where I was barely up on that thing. Celsius, I'm still down, which I'm disappointed in, but I do believe Celsius in the next year is going to be tremendous. So I don't really want to pick up any more shares of it. I'm already pretty deep into it. Like the amount that I have put in, I think I don't really want to put in anymore. I mean, I'm down 12%, but that's just what it is. And then Salesforce, I'm also down about 11%. So again, I'm kind of okay with that because I'm just going to keep buying Salesforce. I do want to keep buying now, and I'm in the green with that. Just because you're profitable does not mean that you need to stop buying it at all, right? Not at all. Basically with HIMS, I was profitable almost the whole time, except once it got down under about this price. So yeah, that's what my portfolio looks like right now. Week 58, my goal was to be at $12,222.70, but I'm only at $10,301 or $1.98. But, and obviously that was like a barely anything going up, right? It's 0.26%. I'm still minus 15, almost 16% away from the goal. Since June 2nd, I am up 40%, right? I started with $7,354, but I've been investing $50 every week, and I actually invested $400 just when things were really going down, extra in the year, right? So it was a little bit more, but still about $50 every single week. And if you exclude all of those deposits, I'm down 2%, which, seeing how all these, where I was coming from, I was down 16%. I was really starting to go down. When you go up here, I mean, it was really bad. I'm now finally catching up to that point, which is great because I do believe HIMS is going to surpass what it did, where it was when I started this challenge. And then that's going to significantly boost everything kind of back to normal. And I think it's going to help kind of bring this whole challenge into a more equal perspective, a little bit less. I don't want to say less volatile, because I do believe HIMS and Celsius, there are stocks that are going to be volatile, but it is what it is, right? So that's where I'm at with this. I did buy ServiceNow and Salesforce, $50 of each. You know, I'm buying partial shares, and then this is a retirement account that I put in $50 every single week. So it's negative $50 in terms of I bought $100 worth and deposited $50. Thank you for watching. I do appreciate anybody who is still watching. Please give a like and subscribe. Yeah, I'm sick. I'm going through all kinds of crazy stuff. And I honestly don't even know how I'm making this video right now, but I appreciate anyone who is still watching it. If you can, give a like and subscribe. Honestly, it really does help. Just, you know, hit that little thumbs up button if you can. If not, it's all good. Thank you for watching if you still are watching. Yeah, and yeah, I appreciate everybody, and never forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.